Hello, beautiful and amazing people. How are you guys doing this evening? I'm super excited that you guys are here. Welcome back to another masterclass brought to you by Seven Ways to Wealth and yours truly, Christina Yvette. So today we have a wonderful masterclass for you tonight. I'm super excited because I love talking about this. So we are going to be talking about OPM, other people's money, the bank's money. All right. And we have Mr. Brian Dorsey in the building. He is one of our educators and a phenomenal funding manager. So he is the founder of the playbook, the funding playbook, and he has been in this space for over a decade. So he has helped thousands of people get millions and millions and millions of dollars in funding. Okay, so he is your resource when it comes to establishing business credit and getting business funding and the money that you need in order to acquire the assets. Okay, so we should not be building wealth with our own money. We need to do what the bank is doing. Okay, the bank is using our money to build wealth, so we need to use their money to build wealth. Okay, and so Mr. Brian Dorsey, he has all of those banking relationships, and he is going to teach you step by step how to become fundable and credible and how to get the OPM. So without further ado, my favorite person on the planet, Mr. Dorsey. Thank you so much for being here. You have the floor.
Good evening. Good evening. Can you hear me?
Hey, yes, we can hear you perfectly.
All right. I had to put my headphones in tonight. I'm usually working at the office, a little later meeting, so I had to work from home tonight. Got the old plug-in headphones in today, and we're gonna get some
Yeah.
work done. So
Love
welcome,
it, love it, love
welcome.
it.
As always, so glad to be a part of the Seven Ways community. So glad to be able to contribute value and be able to teach people how to access capital, right? There's a lot of misinformation online about how to actually get access to capital, what business credit is, how it works, right? In simple, I'm going to tell you, we're going to start out like this. If it qualifies, we can fund it. Now, I want a little bit of a roll check. I know it's late. I know it's an evening phone call. If you're here and you are ready, first of all, if you want to shout out Seven Ways to Wealth and you are here to learn how to leverage OPM, specifically the bank's money, do me a favor and put a one in the chat or a money bag in the chat. Let me see who's here. Let me see who's attentive. Let me see what's going on. All right, I see Courtney with a money bag. I see Bernard with a one. Okay, okay, there we go. I see some ones and some money bags in the chat. All right. So for those who don't know, I am Mr. Dorsey. Everybody just calls me Dorsey for short. I have been in this space for over a decade. We specialize in business funding. I have a background in personal credit, business funding, creative financing, right? And like I said, as long as it qualifies, we can fund it. So what I'm going to do is I'm going to share my screen. I am a visual learner. So I'm going to share my screen. I want somebody to do me a favor and put a two in the chat if you can see my screen. If you can see my screen, do me a favor and put a two in the chat. Okay, perfect. There goes my twos. All right, perfect. So if you are not familiar, we're going to run through this really quick. I'm not someone who likes to, BS or drag on. I like to get straight to the information. This is applicable information. And as everyone should know, or if you don't, I always do leave time at the end for Q&A. So my name is Mr. Dorsey. I represent and manage the funding playbook, and we're going to teach you how to access business funding. This is a process, just like was mentioned, this is a process that is trusted by bankers. I'm not going to tell you something that I think is possible. I'm not going to tell you something that I've heard of. I'm going to tell you something that we do every single day, and we get quarterly updates with all of our bankers. We work with thousands of financial institutions across the nation, from major banks, community banks, regional banks, credit unions, and CDFIs. So tonight, I know there's a lot of misinformation in the industry. Tonight, I'm going to teach you what is actually applicable, right? So this is the Business Funding Masterclass, trusted by bankers and built for founders. Now, As a disclaimer, this is what I say. Over a decade of being in the industry, no two funding deals have ever been the same, right? You're going to hear me say this now. You're probably going to hear me say that a couple times as we go through this process. So the reason I say that is the information here is for general educational purposes only. It does not constitute legal, financial, or professional advice to your specific situation. You're going to hear me say a lot. Funding is not generic. It is not at all. That's why I say, with the importance of over a decade in the industry, I have never seen two funding deals the same, right? So you want to always consult. This is great general information. It's going to put you in a great position if you follow what we teach, but you want to always consult a qualified professional for guidance specifically to your scenario. Like I said, it's going to be great general information, but everyone's specific scenario is going to be a little different, and it all matters, right? Now, really quick, who am I, right? What even qualifies me to sit here? What even qualifies me to even educate you about what this process is? So I am a credit and funding expert. We specialize in tailored funding solutions for entrepreneurs and businesses. Key word here is tailored. There is no one size fits all for funding. It is specifically to your situation and how you can actually qualify you and your business to get access to capital. I am a business growth specialist. I manage a seven-figure consultancy focused on taking this complicated funding process and simplifying it into a step-by-step playbook. And I am a strategic negotiator, which requires us to deal with banks, lenders, and investors alike. Now, like I said, business funding has become a very, very, very popular topic. And I know that sometimes it can seem a little overwhelming. So before we begin, I have a couple things that I want to touch base on. Number one, if this feels overwhelming, if you're trying to get access to capital, if you think it is a myth, this is what today's masterclass is about. You're going to get clear, simple actions today. Today is not about just good information. It's about how do you actually implement what I talk about, what we teach, so that you can position yourself for access to capital. Understand, you don't have to be the expert. You just have to follow the process. I promise you, the information that you are going to, the one thing that I can promise you tonight is the information that you are going to learn today is going to put you ahead of the large majority of applicants who are out here trying to figure out, how does credit work? How does funding work? Is it real? How do we leverage the bank's money, right? We hear all the time on the internet, hey, you can do this with no money out of pocket. You can do that with no out of money pocket. It might be buying businesses. It might be real estate. It might be growing your own business, right? And it is true. I know that sometimes we hear things on the internet and we're like, hey, I don't know if that's true. I don't know if that's possible. I want to tell you that I know that it's possible, but you have to know how to position yourself to qualify for it. Just because you have a business, just because you like the idea of funding, does not mean that you qualify for it. So I'm going to show you how you actually can position yourself to do that. And you're going to see real examples that you can apply immediately. I'm a no BS kind of person. I like to get straight to it. I like to talk about what is applicable, what is working, and what is not, right? So again, as we go through this process, if you have any questions, save those to the end, and I promise you we will go over it. Now, business funding is a popular topic, but why would we even consider business funding? Why is it even important to know about funding and to know your options? Well, smart investors, I want to teach you how to operate like a smart founder. I want you to be proactive in this process. There's too many founders and business owners that I consult with that are being reactive, right? A situation has come up. They're trying to figure out how to learn how to get funded, but they didn't actually know how to position themselves in the process. So understand that smart founders do not wait until they need the money. Oftentimes, by the time you need the money, it might be too late, right? Success loves speed. When you have an opportunity, you need to be able to take advantage of that opportunity. Access to capital allows you to do that. So smart founders are going to position themselves to access capital before they need it, because that way, when they need it, they can take action on it fast, right? So why business funding? These are really the four most common topics that we have with most of the business owners that we consult with. So number one is growth, being able to grow faster. You have a business, how do you grow it? And how do you do it without relying on your own money, right? So growing faster might be doing things like increasing your marketing budget, upgrading your systems, or as you grow, you're going to need to enhance your team. So you may need to bring on staffing in order to scale your business, right? So number one is grow faster. Number two, one of my favorite, being able to actually acquire assets. Again, we hear on the internet, buy real estate, no money out of pocket. We hear on the internet, buy businesses, no money out of pocket. How do they actually do that? They leverage capital. So one of my favorite ways to leverage funding is to invest and actually acquire assets. It might be real estate, it might be upgrading equipment, or like I said, it might be even buying another business entirely. Third, investing in yourself. If you're a part of this community, congratulations, you've already invested into yourself. You have invested into 7 ways. You have invested into wealth education. You have invested to get access to resources that can actually take you where you need to go, right? So you can invest into yourself for things like education, masterminds, mentorships, all of those in order to sharpen your edge, increase your skills, and be able to get more resources. And then number 4, when most people think about starting a business, starting real estate, acquiring this, they think about bringing on investors, or they think about leveraging their own money. What I like to do is I like to teach people how to actually protect their cash and scale without draining their savings or maximizing their personal credit cards. That's another challenge that we see startup companies or founders doing. They have a business, but they may not even realize that personal funding and business funding are 2 different things. They're reported differently, they're structured differently. And the mistake that I see a lot of business owners make is that they're leveraging either their personal funds, their personal savings, or they're maxing out their personal credit cards to grow their business, right? And none of those are the ideal way to do it. All work works, but some work works a lot better than others. And I want to teach you how to actually be able to do that, right? Now, this is the problem, because in order to provide a solution, you have to realize what the actual problem is, right? So the problem that we're going to discuss today is that most business owners get denied, not because they're unqualified, it's because they don't know how the bank thinks. I want you to understand this. This is the biggest thing to learn about access to capital. Banks, credit unions, and lending institutions are in the business of lending money. So just like you're a business owner and you want more customers because you want to grow your business, whether through your product or through your services, banks work the same exact way. The difference is that they're in the lending business. So understand, this is the first myth I want you to understand. Don't think that the banks and lending institutions are against you. They are not. We just have to learn how to play the game that they look for and operate with the way that they think, right? So this is what typically happens. Most people, and you're going to hear me say this a lot throughout tonight as well too, most people think funding is just going somewhere and submitting an application. And I promise you, if that was the case, sometimes I wish it was the case, because that means we would all have hundreds of thousands, millions of dollars, and we'd be able to do whatever we wanted. The reality is that's not the case, right? I used to say most of the work was done before you ever submit a funding application. I don't say that anymore. Now I say all of the work, capitalized, bold, underline, is done before we ever are able to submit an application. So here are the most common issues that most people are dealing with. They apply randomly without a strategy. You're going to hear me say it a lot. Funding is not random. Everything has to be very specific, and timing and the structure of your funding plan has to be very specific and executed to a T. The slightest misstep in funding, the slightest wrong step could be the difference from someone getting $20,000, $50,000, $100,000 in capital and no money in capital, right? Everything is very strategic. Now, the next thing is a lot of times people get denied just because their information does not match up. So I'm going to teach you what it actually takes and what certain things need to look like so that you can actually be structured, so that you can be verifiable, so that you can actually be a qualified applicant when you're looking for the funds that you're looking for, right? Most people actually get denied not because they don't have a good business, not because they're not who they say they are. It's just that their information doesn't match and therefore they're unable to be identified, right? Also, on this, you have to understand the number one thing that banks are fighting is fraud. And you also have to understand is that the modern day banking system is computers, right? A lot of the decisions that happen are based on computers. So they're very strict because if certain information doesn't line up, it's not like it was years and years and years ago where you meet someone and they're verifying everything line by line and they're manually reviewing it and it takes forever to do. No, it is seconds, sometimes a very, very short time period that's automated through computers, right? So again, if your information doesn't line up, because the information doesn't line up, the computer says, hey, I can't verify this person. So now someone who's qualified, now they become a risk, right? That happens way more often than what people realize. And it's one of the biggest challenges that we have to help founders and business owners actually overcome. Number three, they don't have a real business presence. They don't have a real structure, which is what I'm going to show you how to solve that tonight. They don't know which banks to approach or when. Most people think that every bank, every institution, every lender evaluates you the same exact way. That is false. Most people are familiar maybe with a handful of banks. They don't realize there's over 4,000 different lending institutions in the United States alone. Understand that every lending institution will qualify you as an applicant differently. Again, this is not a one-size-fits-all process. And then the other thing that we see a lot is, especially in this social media era, is that people see some information online, they go and try to apply, they have no idea whether they qualify or not, and they end up, excuse me, they end up burning all of these inquiries and getting denied over and over and over again. And obviously, that's not what we want to do. So the solution is to think like a bank. It sounds so simple, but it's so complicated to most people. And I'm going to break it down so bite-sized simple tonight that you're going to understand how to position yourself as an applicant, right? So remember, a lot of us have potential. I consult a lot of business owners who have potential. However, banks only fund predictability. They do not fund potential, right? So understand that. When your file and your business looks organized and professional, your history is clean, and your business is structured properly, getting approved becomes an expected, predictable outcome. When it comes to lending, you want to put yourself, it is a data game. It is a probability. Legally, in funding, we can never guarantee a result. So, but we structure it to put ourselves in the highest probability of an application. This is, again, why I say all of the work for funding is done before we ever submit an application. So what does it mean to have clean history, consistent, information? What does it mean to look like a real business? And what does it mean to actually have a smart strategy? I'm going to break it down for you. So clean history. Lenders want to see your payment history with other lenders, right? So on-time payments and low card balances show that you are reliable. Think about it like this. When we're in school, we have a report card, right? We got graded based on our performance in school. Lenders are going to look at your banking, credit, and financial history. And if you didn't know, that is our adult report card. Those reports, the numbers on those reports for those companies impact more than what people realize. And it almost, I won't say every financial decision, but it almost impacts every financial decision that we make. And again, lenders are going to lend based on your history, not based on your potential, right? Consistent information is the number one reason in my experience why applicants actually get denied. So it's because their name or their address may not match. It has to match exactly to a T for across every report, right? So for example, my name is Brian Dorsey. I am not the only Brian Dorsey in the world, right? So there might be a Brian Dorsey that's spelled differently. There might be a different middle initial. There might be even the same Brian Dorseys in the same states or the same city. And most people assume that when it comes to these lending institutions or these credit reporting agencies, they assume that we just have scores that are stored with those companies. That is false. We have data. And the way that that data is tied to us is based on our name, the spelling of our name, and our address. So when you think about it like that, and when you understand that, you can see how easily, even though I'm Brian Dorsey, you could see how easily my information could get tied up, or your information could get tied up with someone else with a similar name. This is why having consistent information is the number one reason in my experience why people actually get denied. Actually, I can give you a real life example. I was talking to a client today. She's got 780 credit scores, great profile. However, she has some misspellings of her name and some old addresses that don't match up. So assumably, she would be a great applicant, and most people would go ahead and process those applications. However, because that is the scenario, she's having some issues because she came to us because she has great credit. She was working with another funding consulting firm, but she couldn't figure out why she couldn't get any access to capital. And when we looked at it, that is why, because she's going to keep going through this issue where she's going to have to verify herself over and over again because the reports don't match. So again, these things, they seem so simple, but what seems so simple and so minute and so irrelevant, assumably, typically has the biggest impact whenever it comes to funding, right? Real business, you need to know how to have, just because you have a business set up, right? Just because you have a business set up does not mean that your business is going to be treated like a real business. You have to have a proper structure. You need to make sure that you have all of the proper registrations, and you need to make sure that you have a real presence. And then everything, all of this ties together into a smart strategy. You have to know how to apply to the right banks in the right order at the right time. And if any part of that strategy is thrown off, just like I said, that can be the difference between $20,000 in capital, $50,000 in capital, $100,000 in capital. Some of our clients do multiple six figures in capital, right? And it's for these small things. Now, let me give you an example. So two borrowers walk into a bank, right? And remember, this is not a hope game. So I consult some clients and they're like, hey, I'm going to go to this bank and I'm just going to hope and pray that I get approved. And that's not what game this is. That's not what strategy this is. This is all about specific strategy and specific information, right? So two borrowers walk in the bank. You got borrower one, you got borrower two, right? So let me just bring this to example. Borrower one walks in, they've got recent late payments, their cards are maxed out or near the limits, their addresses don't match, it's all over the place. When they're asked for the clear use of funds, they have no idea, right? They just thought about the idea of capital, they saw it, and they just thought that they would go in and submit an application because they thought that's all funding was, right? And when they're asked for their documents, they're scattered, they're all over the place. So when you look at borrower number one, the result looks uncertain, right? And a lot of times, I want to specify this here too. Sometimes you may be borrower number one, you may be borrower number two, you might be a combination of both. So I always like to talk about this on borrower number one. If you're currently borrower number one, it's okay. Life happens, things come up, you don't know what you didn't know. right? You had to overcome some things. It's not about where you are, it's about where you're going. Because if you didn't have this information, now you're going to get the information. You're going to know what you're working towards. You're going to be working towards an objective so that you can get to borrower number two. Now let's break down borrower number two. Borrower number two has clean payment streak. They've got low card balances. Their name and addresses match. When they're asked for what they want to use for their funding, they know how they're going to deploy it. So they want to invest into marketing. They want to acquire some real estate. They want to acquire a business. They want to invest into themselves, right? They know what their growth focused plan is. When they're asked for their documents, they're able to provide them seamlessly and organized. And the result of this is that they look predictable. You want to be and position yourself more like borrower number two, because remember, banks are going to fund and prioritize the file that looks predictable, right? Now, how do we make ourselves look predictable? That's one of the biggest questions that we always get at this point. So how do we actually position ourselves to get funded? Dorsey, you're kind of breaking it down that I see as possible, but how do I actually position myself? So now I'm going to teach you what to actually look at, right? Now, clarification. We're going to start at the foundation, which is credit, and then we'll get more into, we're going to start at the foundation, which is personal credit, because again, this is a general coaching session. So generally speaking, someone, even though we're talking about business funding, generally speaking, most people, or most commonly, people do not have strong enough credit or business credit just to get business credit, right? Or just to get business funding. So we have to start at the foundation. So we're going to start at the foundation and we're going to work our way up by the time we get to the end of this, right? So understand the other misassumption or misunderstanding is that banks just look at the credit score. Hey, Dorsey, I got a 700 credit score. I got a 750 credit score. I want $100,000 in capital, right? I want X amount of dollars in capital. And if you don't know, right, you don't know what you don't know. But if you don't know, banks don't just look at your credit score. And in my opinion, I know it sounds a little crazy. I don't care anything about the credit score, primarily when I'm looking at funding, because the credit score is not what determines you get funded. The banks are going to look at the whole profile, right? The whole report. They are not looking at just your credit score. So even commonly, people might have a great credit score and they think they're overqualified. And then they go to the bank or they go to the lenders and they get nothing, right? And it's because we have to understand, how do we structure the full picture, right? So I'm gonna break it down in 6 things. Talked about it previously a little bit on payment history. Payment history shows your history and shows banks how you previously manage your finances, right? So very simple. How are we going to manage payment history? We want to pay our bills on time, and we want to have a clean recent streak shows reliability. So let me give you an example. Or you know someone, you may have a family member, a friend, someone you know, or you may know someone. They always want to borrow money, right? They're like, hey, let me borrow $100 till Friday. Let me borrow X amount of money till Friday, right? And at first, you might give it to them. But what happens is we typically know someone who says, hey, I'm going to pay you back this amount, I'm going to pay back this. And then the time comes and then you're not able to get paid back, right? And over time, what happens is they build a history of not being able to be paid back. Remember, banks and lenders are in the business of lending, but they also want to know that they're going to get their money back, or they want to believe, based on your historical patterns, that they're going to get paid back, right? That's how payment history works. It is your reputation on paper. Number 2, I'm gonna say something and it might throw some people off. Banks are in the business of lending money, but they want to lend money to applicants who don't look like they need money. That sounds a little backwards, right? But how do we communicate to the bank on how we don't need the money? There's certain data points that people are not aware of, right? So let's talk about it. The way that we show the bank that we don't need the money is whatever credit or whatever capital we have so far, we want to show them that we can manage it well or that we don't need it. How do we do that? A key metric is that you want to stay under 30%. If you have credit cards already, You want to stay under 30% for your limit of each card at the time of applications. Let me just do some simple math. Let's say we have a $1,000 credit card. 30% is a $300 balance or less, because $300 is 30% of $1,000. If we're using $500 out of that $1,000, we're at 50%. If we're using $800 out of that 1,000, 80%. And if we're using $100 out of that 1,000, we're at 10%, right? So these are important, because now that we know that banks are in the business of lending money, but they like to lend money to people who don't look like they need the money, then I know that I need to show the bank that I don't need it. So I need to be minimally under 30%, ideally less than 10%, right? Very, very, very important, right? Matching information, I cannot emphasize it enough. Your name and your address has to match everywhere. That's at banks, that's on your credit reports, that's on your IDs. If it does not match, you have just dramatically increased, regardless of a credit score, regardless of a credit profile, you have just dramatically increased the odds that you would be denied or not approved for an application, right? Number 4, account age. Older accounts look better. It shows a longer history. So you want to avoid opening too many new accounts before you're applying, right? Again, history. The longer history we have with someone, the more we trust them, right? Banks work the same way. They say, hey, I don't know you, so I'm going to look at your reports to see what kind of history you have so that I can compare what I want to lend on you on, right? That's account age. Inquiries, very important. This is why I also hate credit scores, because when it comes to inquiries, typically, and this is, again, generally speaking, this is not to your specific situation, but generally speaking, anytime you get a credit inquiry, it will typically drop your score somewhere between 3 to like 8, maybe 10 points, right? On average, 3 to 5, seen as high as 8 to 10, right? Generally speaking. Now, most people, when they look at that, they're like, okay, I just lost 3 points. I just lost 5 points. What does that matter? If I got a 700 credit score, if I got a 750 credit score, what is 3 points, right? And it's because they're so focused on the score that they don't understand how the profile works. So with inquiries, even though they don't impact the credit report a lot, by a point, what they do is they leave a record of how often you're looking for capital, using your credit, or looking for financing. And so too many inquiries in a short amount of time, even though they don't drop a lot of points, they are showing and they make the lenders think that you become desperate for credit or desperate for capital. And that's not what you want to do. Again, everything we do has to be very strategic. So for example, when you're looking at inquiries, you really don't want more than 3 inquiries within the last 6 to 12 months, right? They're going to stay on your credit report for 2 years. Even though they stay on the credit report for 2 years, even that can be a misunderstanding, because I've had consults with clients where they had inquiries that are over a year old because they don't understand how the impact of inquiries work. So inquiries are going to show on your credit report for 2 years, but they really only matter within the last 6 to 12 months. 2 years is just kind of a facade, right? And honestly, that holds some people back for funding, because they don't know how the credit report works or how that data and information actually translates to them being able to get funded, right? And number 6, when you stay ready, you ain't got to get ready, right? We've heard it, and it's the truth. Stay organized. The more organized you are, the more stable you look, the more experience you have, right? So you want to have your documents, and we're going to go over what documents you're going to need. You want your documents ahead of time in a clean folder and organized before you walk into any bank, right? So, all right. Now, most importantly, once you have the oh Lord, hold on. Okay. All right. So now that you know how to position yourself personally, that's how you position yourself personally, right? Now we're going to get into the business. Now, I know this is a trust class. I love this class. I've learned so much from Christina. I've learned so much from this community, right? Now, I can't tell you what is right or wrong to your scenario. I can only tell you the way that I perceive things and the way that I can consult clients in order to actually get this done. So let me clarify. This is a trust class. Now, the way that I was taught, or the way that I understand, is that I want to establish private trust that are not at risk to the public, right? So, with my understanding of that, the way that I use this information is I want to keep my trust private, even though it's possible to get a trust funded, and we can talk about that if someone has questions at the end. But for my particular strategy, I want to keep the trust and its assets private. So, what I teach personally is to leverage state entities, public entities, such as LLCs or corporations, in order to operate in the best interest of the trust and then convey or transfer the assets that I acquire with public entities to the trust, right? That is my personal strategy. So because of that, that is what I can speak on, right? So understand you must set up your business the right way. Just because you have a business set up, just because you got that LLC paperwork and you went to social media and, we felt like big bosses. Awesome. I'm glad you got that business established. However, just because you have it, just because you have that paperwork does not mean it was set up properly, right? So let's break it down. Understand this. When banks see a real business, they send real money. Remember, banks and lending institutions are in the business of lending. You don't have to think it's a myth. You don't have to wonder if it's real. Step outside and take a drive down the street, and you're going to see multiple banks on as you pass. All of them are in the business of lending, right? So you don't have to wonder if this is real because we pass by it in tangible, real locations every single day, right? So now that we understand that, now we have to understand how do we structure our business to be presented like a professional business and not like a hobby, right? So again, the way that I teach you is I teach you to leverage LLCs or corporations with your Secretary of State. For those who don't know what a Secretary of State is, again, I don't want to make any assumptions. Every state has what is called the Secretary of State. This is a public record where you will go to register your entities, right? Now, you can have an LLC or you can have a corporation. Biggest question I get all the time, which one is preferred? It varies depending on your particular situation, right? Now, first thing you want to do is register your LLC or corporation. Second, you're going to go get your EIN from the IRS if you haven't already. Now, I like to always say here, EINs are free. Christina has showed you how to get EINs for trust. Very, very similar process when you get an EIN for an LLC or a corporation. The reason I say it's free is because I've consulted people from a lot of different backgrounds. And I'll tell you, what I've heard a lot is that people pay a lot of money to get an EIN set up. I've heard $500, I've heard $300, I've heard $1,000 plus to get an EIN set up. And it hurts me to hear that because an EIN takes 5 minutes to set up. There's all kind of public information. You can go on YouTube, right, and set up your EIN in literally less than 5 minutes. So I just like to clarify, you don't have to pay for an EIN. It is free and you can get it immediately, right? Now, when you have your business set up, it's important that you get a business address. You want a real business address, not a PO box. Now, something that I want you to understand is that when it comes to a real business address, here's the next question I get. Dorsey, I want to access funding, but I don't want to go get an office building. Okay, that's perfectly fine. So I'm going to show you a cost-efficient way how you can get a legitimate business address for just a couple dollars a month or a couple dollars a year, right? All you're going to do is you are going to go to Google, you are going to type in your city and state, and you are going to type in either executive office or executive suite. Now, people online, and remember, funding is an industry that changes. This is why I say this, because when you are working with funding, you have to work with someone who is actively in it, because this is one of the fastest changing industries that I have ever been a part of. And specifically the last 2 years, the industry has changed dramatically. So it used to be we would do these things called virtual offices. Most common were places like Opus, Regis, and Alliance. Now, that worked phenomenally 2 years ago. However, those don't work anymore because there are too many people using them. So the reason that I give you the business address to go look at the executive suite or the executive office in your city and state is because that's going to be a lot more legitimate and less used than these public virtual offices, right? So even that alone is going to put you a long way ahead of someone who just heard some information on the internet and they thought it worked, right? Now, the next thing you want to do is you want to have a professional email and you want to have it at yourbusiness.com, right? Very simple. All you're going to do, the most common website that I use, you do have to have a website first. You're going to go to GoDaddy. On GoDaddy, you are going to be able to purchase a website or a domain. So that's the first step. You have to go purchase a domain. Then what you're going to do is we use Google Domains or Google Suite to connect our domain to our business name, right? So let's just say, for example, if my business is called ABC Consulting, I don't want abcconsulting@gmail.com or abcconsulting@yahoo.com. First of all, you want to look at what successful businesses are doing and replicate that. You're never going to get an email from Amazon that says Amazon123@gmail.com, Walmart123@yahoo.com, Hotgirl87@hotmail.com. You're not going to see that. The legitimate businesses are going to have a business email address at their domain. So again, if I have abcconsulting.com, I want Brian or Dorsey at abcconsulting.com or what that domain is. That one simple thing, remember, when you're submitting applications with a banker or a lender, that is most likely their first impression. And we hear all the time how important first impressions are. If you submit your professional name with your business domain, that is going to be a great first impression from an applicant or from a lender or bank that you are requesting funds from, right? Going to dramatically increase your funding probabilities. Remember, this is a game of structure. This is a game of probabilities. That's what this is about, being able to put yourself in the highest probability for an approval or for the product that you're looking for, right? Next thing, business phone number, dedicated line listed under the business name. Listen, this is something I didn't emphasize enough previously either, but sometimes things happen, right? So let me give you a prime example of this. You want a dedicated business phone and you need to have a voicemail. I had a situation, I was working with a client, a very, very successful client. However, they had an internet business. They actually didn't have their business had really good revenue, but they didn't have a very large team, right? They were pretty much solo operator. They had a business phone, everything just kind of for like emails and just some basic things to separate it. But on his business phone, he didn't have a voicemail. And when we were doing the intake, right, we gathered all the information and we were processing with a lender. We had a $200,000 pending application with a lender. Everything was great. However, because he's a solopreneur, even though his business is doing phenomenal, he can't take every phone call, right? Naturally, it just happens. And so what happened was he was pre-approved for the 200,000. All they had to do, get this, identity verification. Not that his business wasn't legitimate, not that his bank revenue wasn't legitimate, none of that, right? Identity verification. What did I say? The number one reason that people get denied is for mismatching information. They just needed to verify his identity. We would have had a $200,000 approval, would have been a party. Everybody would have been celebrating. Well, what happened was he didn't have a voicemail set up. And so when the lender called him, he didn't have the voicemail set up. And so they got a generic voicemail. They denied the application for not being able to verify identity or the legitimacy of the business because the lender is going to say, hey, you're running a business, you expect to have a legitimate business, but you don't even have a voicemail dedicated for your clients to reach you. And the lender, regardless, again, first impression, they don't find it legitimate. So again, it's never, in my experience, it's never the big things that kill a deal. It's always the small things that kill a deal, right? That's why I say everything that I teach is from experience and has to be followed from a T, right? So you need to have a business phone number set up, needs to be dedicated to the business so that you can have a business voicemail that is a professional voicemail, so that if you miss the call, the first impression of that lender is that you have a professional voicemail, right? Now, next one, business bank account. I cannot tell you how many times over the years someone has had a business, a successful business by all means, but they're running it through their personal business bank account. That is not the way that deals get done, right? So you have to have a business bank account that is specifically for and dedicated to the business and make regular deposits. And then you want to have an online presence, some kind of simple website, a Google listing, or active social media profiles. Now, when it comes to website, people say all the time, hey, Dorsey, I don't have all this money to pay a developer. Well, congratulations. We're in the AI age. We're in the AI era. There's all kind of AI platforms. There's a ton of them. You can go on Google and Google them. You can have an AI platform, Claude even, that can make you a website within a couple seconds or a couple minutes, right? So it doesn't take a lot these days. Or worst case, if you're not tech savvy, you can go on a website called Fiverr.com and get someone to make you a cost-efficient website. And it doesn't have to be a detailed website. It can be a one-page website with some information and some contact information. And here's the other thing. Make sure the buttons work. Because just like I gave you a scenario where we had a client with a business phone number that didn't have a business email set up, sometimes, or one time, well, yeah, this happened one time notably. Client had a website. We reviewed the website to make sure that it was a website. It looked like a good website. And we didn't actually click the buttons. We just went to the website. Hey, they had a nice page. It looked clean. We're like, hey, this is awesome. The only problem is we personally at the time didn't click the buttons. We just saw the website, thought it looked amazing, and we assumed that it was good. Well, what happened was we sent it to the lender. Everything else checked out. The banker, because we submit our clients to personal introductions to bankers, the banker calls me and says, hey, Dorsey, did you check that website? And I was like, yeah. And they're like, well, when you click the buttons don't work. Deal done, right? So again, it's these small things that matter so much whenever it comes to getting access to capital. So again, we've covered a lot so far. I do want to make sure that we are on track. We making this valuable. Like I said, I know I talk a little fast. I'm very passionate about what I talk about. And I want to make sure that we get to the end so that I can answer all of the Q&A. But we've discussed some things that you may or may not have been aware of. So what I want you to do is just do me a favor. When you see these changes, write them down for maybe what your profile might be, and then what you could do or what you would change in order to make your file more predictable, right? That's our little homework as we go through this, because then at the end, when you have some questions, I can answer those specifically, right? Now, excuse me, there are 3 paths to a fundable business, because just because you have a business does not mean it's fundable. And there are different routes, different ways that you can access capital, right? Business funding. There's 3 that we're going to talk about. We're going to talk about startups. We're going to talk about aged corporations, which you can establish or purchase. And we're going to talk about one of my favorite, which is acquisitions, right? There are pros and cons to every one. So again, when it comes to, hey, what is the best one? There is no technically best one. It's which one is best to your specific situation, right? So there's pros and cons to every one. So let's talk about startups. Startups allows you to build from the ground up with maximum flexibility. You can control the name. You can control where it's at. You control all these different things, right? All these unique offerings and products, etc., for your business. Now, a misunderstanding is that just because you have a startup business, a lot of people believe that, hey, just because you have a startup business, that you can't get access to capital. That's not true. Depending on the bank, startups could be funded with at least 30 days of being established. But obviously, we talk about history, and the more history you have, the easier it is to get access to capital. So, of course, the older the business, the pro to the startup is you get the most flexibility and build it from the ground up. Yes, it can still get access to capital. The con is that it's not as old, so it doesn't have as much history, right? So that's a startup. Now, then you have age corporations. Some of you might have one of the most valuable pieces to a funding puzzle, and you may not even realize it, right? Age corporations. Age corporations are either you can acquire them or you can establish them. So someone says, hey, I don't know if I have how do I know if I had an age corporation? So most commonly what happens is someone has an LLC or a corporation that you maybe had this business idea last year or a couple of years ago. You started the LLC, you started the corporation, and maybe it was a great idea at the time, but maybe things just didn't work out at that time period, right? There's a time for everything, right? And maybe at that particular time, there wasn't too much going on. So maybe it's been there to the side. Maybe it's been a year, 6 months, a year, 2 years, 3 years, and you just didn't know what you didn't know. And today you're on with me and you're like, hey, I've got a business that I established 6 months ago or a year ago or 2 years ago or a couple of years ago that I've never used. Congratulations. You have an age corporation, right? You can establish them or you can acquire them, right? All this is it's an entity that was previously set up that has history. And with the history, it is perceived to be more stable and more valuable, right? We're going to talk about history a lot throughout this process because the longer established history or the longest credit history equals broader access to financing. Now, yes, the pro to an age corporation is if you have an age corporation, congratulations, you have a very valuable entity that can be used. You can also acquire age corporations. Now, again, the pro to age corporations is you can fast track time. The con is that although they are a real solution and a real option, you have to work with someone who actually sources and deals with age corporations consistently. Just because you saw a post about it, just because you might have saw it on YouTube, does not mean that that is truly legitimate, right? So you have to be able to work with someone who can match you and vet age corporation and funding ready entities, right? So that's age corporations. Pros are you can build it up, and the pros are you can build it yourself for free at, well, just the cost that it takes to set up the business. And the pro is that you fast track time. An age corporation who is 6 months old, a year old, 2 years old, you can fast track that 2 years instead of someone who says, hey, I'm going to start a business today, treat it like a startup, and now they have to wait for 6 months, a year, 2 years while they're missing a lot of opportunities in an ever-changing industry, right? So those are the pros and cons to age corporations. Now we're going to talk about acquisitions, which is one of my favorite, right? So acquisitions allow you to buy a business that's already established and you acquire established operations, revenue, staff, and customer relationships. When we talk about speed, acquisitions allow you to fast track growth because you can acquire a company that already has these things in place. So you can acquire cash flow, you can acquire history, and you can acquire assets that you can use to get access to capital for that particular entity, right? So these are the three most common ways that we see clients or businesses get access to capital, right? Again, there's not a right or wrong. It just depends on what's going on with your particular scenario. Now, next thing, we're going to do a masterclass on types of funding because people come all the time and they say, hey, I want funding, and they don't know what funding or what product is applicable to their particular situation. So we're going to talk about a couple different business products. We're going to talk about over here on the left, we're going to talk about business credit cards, business lines of credit, revenue-based financing, SBA loans, and term loans, right? Now, all of them are great products. People ask me all the time, hey, what product is your favorite? I tend to lean towards certain products, but there's not really a best product out there because, again, it's going to be dependent on your specific situation. So we're going to talk about the benefits and what each one is beneficial for as we go through this process, right? So with business credit cards, this is where I typically lean towards personally, is because they're good for two things. They're good for 0% introductory rates, and they're good for fast working capital. So typically what people don't realize is that with cards, with the credit card specifically, is that they have introductory rates, typically on average from 6 to 18 months. Most commonly, it's going to be 6 to 12 months. And I've seen some as high as 21 and 24 months of 0% interest. What this means is that it's an introductory rate. What this means is that for the introductory 0% rate for that particular product, you can leverage that capital without paying any interest on the capital that you used, right? So this is massive when you're looking for access to capital and you don't want to get hit with high interest rates, and you still want to be able to work and manage your business, right? Credit cards can be used anywhere that credit cards are acceptable. You can also, it is possible, it takes a very strategic approach, but it is possible to liquidate credit cards and still maintain your 0% interest, right? So those are the benefits of credit cards. When it comes to business line of credit, another one of my favorite products. Now, a business line of credit works almost like a credit card. However, the difference is that you can, the business line of credit, you can either write checks against and pay whatever you have to pay, or you can make wire transfers from your business line of credit to a checking account, right? So it just gives you fast access to cash, and it gives you flexible assets now, or access, right? Revenue-based financing. So revenue-based financing is beneficial for two things. One, you might have a business that has strong revenue, and what this is beneficial for is a quick cash injection based on your business revenue. Now, you can get revenue-based loans, but whether you have good credit or bad credit or challenge credit, we'll say. But this is also beneficial because you heard me talk a lot about credit and making sure that your credit was in line as you go through this. Revenue-based products will still consider your credit, right? Even though it's business funding, large majority of the time, your credit is still going to come into consideration. The difference is the impact and how that lender evaluates your credit towards that particular application. So revenue-based financing also has another great solution. Is, let's say you have challenge credit, but you have a business that makes revenue. Let's say your business makes $10,000, $20,000 a month, right? But you've got some challenge credit on your report. You can look at revenue-based financing options that you may not even be aware of so that you can get access to capital. I talk to a lot of business owners, and this is massive. I talk so much about credit, but I talk to a lot of business owners who life just happened, right? One thing led to another. Maybe they went through some personal situations. Maybe they were sick, right? Things come up, life happens, right? And maybe just for that time period, they got some challenges on their credit. And so most times they got a business that's growing, they might have a business that has revenue, and they just didn't even think about the option of revenue-based financing. And they just thought that access to capital was a myth because they didn't know how they could leverage revenue-based financing to get access to capital to grow their business, right? So that's the benefit of revenue-based financing. Then you have SBA loans. SBA stands for Small Business Administration. It is basically a government-backed loan. These are phenomenal, but they're good for more larger amounts with longer repayment terms, right? So again, you have to know what product is applicable to what you actually want to get. And then you have term loans, which are more beneficial for more of a fixed and predictable monthly terms, because you know preemptively you're paying. It's just like a good example of a term loan is like an auto loan or a mortgage. You know exactly how much you're paying on a monthly basis, and you know for how long you're paying that for, right? So ultimately, like I said in the beginning, There are different products that are applicable depending on your situation. The most important part is that you have to understand how to qualify for it. And at the bottom, you have to understand that if it qualifies, then it can be funded, right? Now, relationship-based banking. Give me about 10 seconds. Let me get a sip of water and I'll be right back. Now, relationship banking. Banking now, I've been talking about it for the last couple of years, but banking now is really fully transitioning to relationship-based banking. So this is why it's important that you're on these calls. Because even though I talk a lot about credit, again, the industry has changed. 2 years ago, if someone had great credit and they had good financials, they could pick and choose whatever bank they wanted to go to, for the most part, right? Generally speaking. And they could get access to capital if they had good credit or they had good financials. And the industry has changed. Now banks and lenders, they want to see good credit and good finances, but they also want to see relationship-based banking. Now, what does that mean? Relationship banking is oftentimes kind of like dating, right? A bank has all of these applicants that want to look at their products, right? Just like you might have this beautiful human, man or woman, right? Gorgeous, amazing person, and everybody wants to be with them, right? But they got to have some kind of filtration system. Just because someone shows or is interested in you doesn't really mean that that's the most, aligned relationship or aligned contact that you can have. So banks now, you have to treat it kind of like dating. Banks say, okay, yeah, you look good, you look amazing, right? You're awesome, but the looks, it ain't what really matters, right? It's applicable in dating, it's applicable in banking as well too. So how do we build a relationship with the bank? We're going to use their products. What are banking products? Their products are their checking accounts, their savings accounts, their credit cards, their loans, their mortgages, their investment accounts. The more accounts that you have with a bank, the stronger the relationship is with that particular bank. So that's with the bank, but you also have to have a strong relationship with the banker themselves, because the banker is the contact or the person who can advocate for you as the applicant or the business to the bank, right? So how do we actually communicate? How do we build a relationship with bankers? Because it's very common that I have a conversation with someone and they have no idea how to even talk to a banker, how to build a relationship to a banker. And quite frankly, a lot of times people are scared to talk to bankers. You don't have to be. You just have to understand how to communicate with them. So when you are establishing relationships, we're going to talk about what to bring. We're going to talk about the best practices, and we're going to talk about 4 questions you can ask that are going to put you light years ahead of almost every other applicant that they're dealing with, right? So what to bring? A clear business explanation. Now, let me start here by saying an elevator pitch of a business explanation. When you are talking to a banker, you have to think how many conversations they have on a daily basis with both people who have an idea of what they're talking about and people who have no idea what they're talking about, right? And statistically, I'll just call it what it is. Statistically, most people have no idea what they're talking about to a banker, right? So you want to separate yourself. You want to be experienced, right? So when someone asks you for a business explanation, it needs to be short and punctual. I would say 2 to 3 sentences. If you don't know how to explain your business or what you do in 2 to 3 sentences, you got to go back to the drawing board. You got to talk to Claude. You got to talk to ChatGPT, and you got to get really comfortable at pitching your business in a couple sentences. You don't want a long, drawn out explanation because you might say the wrong thing. The longer someone speaks when they're asked a simple question, the less experienced or the less comfortable that they appear, right? So it's very important that you have a clear business explanation that's short. Bring funds. Now, obviously, the more money you bring to deposit with the bank, the better it's going to look with the banker. Now, certain banks do have certain minimals, right? There are certain banks who have like a $250 minimal. There's other banks that in certain areas, they might have $1,000 or a $2,000 minimal, right? Depending on the bank account. But generally speaking, you could open up a business bank account with $50 to $100. Now, I say that as a minimal, but you really, again, if you want to build a relationship with the bank, you want to have a stronger deposit history, right? So you want to have deposit funds. You do not want to open up a bank account and that you spent 30 minutes, an hour with this banker, and they say, how much do you have to deposit? And you say, I have nothing. Not going to work. Not going to get you anywhere. Even if, let me give you a hack. Even if you're at the bank and you're down to your last $50 to $100, don't appear like it. Let them know, hey, all I have cash on me today, I walked out the bank, all I have cash on me today is $50 to $100. That's going to sound a lot better than say, all I have is $50. All I got is $50 in my name. All I got is $100 in my name. Because now the banker's sitting here thinking, well, why would, yeah, we can open a bank account, but again, everything is documented. So if you deposit 50 or $100 and you tell them that's all you have, and then you come back later and you want $20,000, $40,000, $50,000, $100,000, it ain't adding up. The math ain't mathing, right? So we got to make it look like we are experienced at what we are doing when we are communicating with bankers, right? Very important. Personal ID, just like we talked about earlier, needs to match all of your addresses and names and your entity documents, right? Now, best practices. I talked about it earlier. Keep it short, keep it direct. Please do not be long and drawn out, right? Now, focus on a long-term relationship. When you're communicating with a banker, again, it's like dating. They want to be mindful of their time. They don't want to entertain someone who is here today and gone tomorrow. They want to build a relationship with someone who is going to use them stronger in the future. That's who they're going to prioritize building their business with, right? Very important. Show up early. If you show up on time, you're late. Again, bankers are very busy. They have conversations with clients who know what they're talking about and clients who don't know what they're talking about. And the day can seem very, very, very long. And you want to make sure that you are mindful of their time. So show up early. Show up 5, 10, 15 minutes at least for your appointment so that when they call you, again, you look prepared, you look professional, you look experienced. And when you explain your business, you want to explain your business in a low risk manner. If you explain your business and the banker appears that it is high risk, you are not going to have a great result whenever it comes to getting funded, right? Now, what to ask? Here are 4 questions you can ask the banker that most applicants are not, and will tell them that you have some experience, right? So one of the biggest things that we talk about here are strategy. So let me introduce you to how strategy works, right? So when we talk about credit reporting agencies, there's 3 major credit reporting agencies we talk about. There's TransUnion, there's Experian, and there's Equifax. Now, most people believe that when you go to a bank, the bank is going to pull all 3. Typically, that is not the case. Now, of course, there are some banks who will pull all 3, but most banks will pull 1 or 2 of the 3, right? So for example, I'm gonna give you 2 examples, and I hope this opens your mind to how big this can get, right? So let's say, and also most people believe that the same information that's reporting on one of them automatically reports to the others, and that's not true. So we're gonna use that to our advantage, right? So let's say, for example, you have your credit report, and you've got a good TransUnion, you've got a good Experian, but for some reason there's this negative information on Equifax. Most people, they see that negative information on Equifax or that one bureau, and they say, hey, I'm never going to get approved. They don't realize that, hey, if I know banks that pull from TransUnion and Experian, and if my Equifax is bad, then I know not to use banks that pull my Equifax, but I can use banks that pull my TransUnion and Experian, right? I hope you really understand the bigger picture for that. But the way you find that out, people ask us all the time, hey, how do you know what banks pull from what bureau? Well, that's our intellectual property, but we gained it because we run applications and we have conversations with bankers. They're going to let you know. So people ask me all the time, hey, how do you know what bank pulls what bureau? Well, I asked them. We ask them. We process applications. How can you find out when you're going to a prospective bank? Ask them what credit bureaus they pull from for what products. Huge. The other thing that you can ask is, can you apply for multiple products? So most people go to a bank and they just apply for one product. They say, oh, I want an auto loan, or I want a credit card, or I want a mortgage, or whatever the case may be. And that's what they were looking for, right? They may not have even known, they don't even know the possibility that you could go to one bank and get multiple products. How do we know this? You ask. You might be able to get a mortgage and an auto loan in one inquiry. You might be able to get an auto loan and a credit card in one inquiry. The inquiry was already there. So if you got approved for one product, why would you not try to get others? Well, most times because most people didn't even know that it was a possibility, right? Now, third question, what documents do you need? This is a very, very, very important question, because the lenders or bankers will tell you either what documents are needed or what documents may not be needed during the application process, right? We'll talk about that a little later, and I'll try to bring that home, but that's very important. And then what's the timeline? So a lot of people believe that, hey, I'm gonna go open up a bank and I can apply for products next week. Well, that's not the case for every bank. Sometimes you can apply immediately. Sometimes you might have to wait some time, right? So for example, I had a client come to me a couple months ago. I don't know, time be flying. So sometimes I'd be thinking it's like a month or two ago, and it'd be like 6 months ago, right? So I'm just gonna say, previously this year, we had a client come to us, and they were looking for access to funding quick, right? They were trying to figure it out. And they had a bank called Regions Bank, which is a regional bank within their particular area. So they came to us and they were like, hey, I'm gonna go to Regions. I just opened up the Regions account, a couple weeks ago. Can we process Regions? And they were very adamant on that because they were on a time limit to get funding. Well, what they didn't know was Regions makes you wait 6 months. They want to build a relationship with you for 6 months before they allow you to apply for a product. So if you're someone and you want to get funding within a week, a month, etc., you need to ask the bank what their timeline is before you can access the products, because you don't want to be wasting your time with a bank and it doesn't fit your timeline. Because it doesn't matter what your credit or your income is. If they have timeline restrictions, you have to wait on that timeline, right? So again, these are very important, very, very simple processes that you can use, that you can apply to extremely dramatically change your banking scenario. Okay, hold on. Look like we're gonna have some technical difficulties. That's all right. That's all right. Sometimes you just gotta be able to pivot, right? So do me a favor. Can y'all still see my screen? Do me a favor and drop a 3 in the chat if you can still see my screen. I know it's not single screen anymore. You might see my whole PowerPoint structure, but just do me a favor and drop a 3 in the chat if you can see that. Okay, awesome. Okay, cool. All right, so we're just gonna have to rock out and do it like this. Might look a little different, but it's all right. The most important part is that you get the information, right? Sometimes, look, this is a life lesson. Sometimes we gotta do things ugly. Sometimes we might start out a certain way and we want it to look a certain way. We want it to be clean. We want it to be professional, but sometimes things just come up and we got to be able to pivot, right? So that's what we're going to do today. Now, I'm going to get back to the slide that I missed because this is important, right? I talked about a lot today. And again, I do want to be very mindful of my time, but I also want to be very mindful of your time. If this has taught you something new today, and if you're finding this valuable, do me a favor and type win in the chat. I want to know who's listening. I want to make sure that this is applicable. I want to make sure that people are actually getting value and ways to actually implement all of this information. Awesome. I do appreciate all of those comments in the chat. Thank you. All right. So now I'm going to show you a couple scenarios. Now, as a disclaimer, I've said it over and over again, never seen 2 funding deals the same, and past performances do not guarantee future results. But we've covered a lot. We've looked at a lot of different scenarios. We've seen some great things. We might have seen some things we had to fix, right? And that's okay. But again, what I talk about all the time, it's not about where you are. It's about where you're going, right? It's not about the scenario that you're dealing with today or the misunderstandings that you might have had prior to today, because the most important part that I believe is information changes situations, right? So I want to go over 3 case studies. They're great case studies, and they highlight different scenarios or different ways from how people started versus where they ended up after they got this information, right? So these are some of my favorite scenarios that I like to talk about over and over and over again. I'm just going to break down 3 of them really quick, right? So the first one that I like is from denied to $75,000 approved. And we're going to talk about my guy, Marcus, who was an aspiring entrepreneur, and he started with a 590 credit score, right? Now, really what happened was, again, I am passionate about my industry. I talk very highly and very passionate about credit and funding. However, a lot of times there's just misinformation, and we got to be a pioneer to the industry because there's just a lot of conflicting information, a lot of misinformation out there that has people just on places that they're never really going to find what they're looking for, right? So Marcus highlights those, and he also highlights the fact that, again, it's not where you start, it's where you finish, right? So the problem with him is that he saw online, he saw some video, probably was a TikTok video, YouTube video, wherever people be, posting this information for entertainment, but it might not be applicable information, right? And Marcus was a victim of that. He went online, he saw all this information about, hey, go to this bank and apply here, they're gonna give you 20,000. Go to this bank, they're gonna give you 50,000. This bank, they're gonna give you 10,000. This bank, they're gonna give you 100. And he didn't have context to it, right? So he was just facing all the internet stuff. Hey, the internet told me to do it, I'm gonna go do it, right? And what happened was he was applying at all these banks that all this content was for, and all of them told him to apply this information, and he wasn't getting where he was going, right? So he was getting denied by multiple banks, and he truly believed, this is why I talk in the beginning, funding is not a myth. It is an option. We just have to know how to position ourselves to qualify for it, right? So what happened was he was going online, submitting all his apps, got denied by multiple banks. It's because he didn't get the information that we talked about today. He didn't understand why he was being denied. He just knew somebody said, go to this bank, you're going to get 20,000. He went there and didn't get nothing, denial, right? And the what was going on was he had outdated addresses. He had high card balances. He had late payments. And ultimately, he didn't even think funding was an option, right? So what happened was he came to us. He got this information. We were able to identify the exact denial reasons. We were able to give him our resources, help him clean up his credit, lowered his utilization, and built positive reporting accounts. Now, the reason I like this so much is because he started with a 590. He structured his report. Now, let me tell you this. I don't think this was about a 6-month process for him. So a lot of people, when they talk about funding, they're like, hey, if I don't get funded next week or if I don't get funded next month, it ain't real, right? And again, you got to be able to go through the process. If you haven't learned anything else today, understand funding is a process. But when you follow the process, it works, right? So ultimately what happened was after he went through the process, after he realized what was going on, after he realized what needed to change, we were able to leverage our contacts with currently the #1 bank in the US, which is Chase. He went from a 590 credit score, thinking funding was not real, not an option, thought we were all liars, right? And realized that when you structure right and you qualify for it, it's real. So he went from a 590 credit score thinking credit or funding wasn't real to where, if you see on the right, he was able to get 75,000. Now, this is not a typical scenario, but I like it because it's a real scenario, right? He went and got $75,000 from one bank. He launched his mobile detailing business, invested in marketing, and brought on equipment, all without using or touching his savings. So is it real? Absolutely. Is it a process? Absolutely, right? So that's the first one, Marcus. Second one I like to talk about is Michael. So on the flip side, Michael had everything in the public. He had the credit, he had the income, he had the successful business. And the problem was, is he didn't understand how to use the right banks, right? He believed that every bank was the exact same, right? So what happened was he banked with a business. And after years of building that business and them seeing his revenue and all these different things, right? He thought that they would give him the best deals. And what happened was the offers they were giving him were very conservative and very slow, right? Not very high as compared to what he was able to do. So what he needed was acquisition capital because he wanted to expand his business. And by all means, he had a 7-figure business, right? Now, he was kind of upset because he didn't understand how he could give this bank all this money for all these years and all this loyalty, and they couldn't give him more than $50,000, right? Now, $50,000 is not a small amount of money, but when you're looking for 200, 300,000, you got to do a little bit more work with that 50,000 to get to where you're going to, right? So all we did was help Michael understand this and that. See, most people think it's this or that. And that one word, the and or the or, make a major difference, right? Because Michael was like, hey, I got to do this bank or I got to do that one. And all we helped Michael understand was, hey, we're going to use this bank and that one. And you don't have to change what you've done at the other place. We just got to get real and realize that, hey, not every bank is the same. So all we did, very simply, all we did was help him understand that. We helped position his request for acquisition funding, and we matched him with a lender that favored his strongest bureau. Now, if you look over here on the right, it's a little small now. I'll move my arrow. You can see this email right here. Had to verify, was based on some calculations, qualified for a little over 300,000, right? Sees all that information. He was actually a little over 300,000. He ended up accepting 300,000 because that's what he needed for his particular acquisition. But as you can see, Michael was a scenario. He was successful by all means, but he didn't understand the structure. He didn't understand the specifics. And so now he was able to keep his primary banking relationship, add one new lender, and gain $300,000 from structure and strategy. Not that we had to do anything crazy. Again, remember, all of the work we do for funding is done prior to ever submitting the application, right? So massive. And the last success story I like down here, it's honestly one of my favorite examples. He is one of our biggest partners today. And I personally like turning non-believers to believers. A lot of people run away from like non-believers or, things of that nature. And they just kind of think it's not worth the time. Me personally, I like turning a non-believer to a believer because I know what I'm talking about. And I also realize that when a non-believer becomes a believer, there's a lot that has to happen in order to change that paradigm and that perspective. And now that they're a believer, now we can get some things done, right? That's my understanding, right? So we're going to talk about Eric. Now, Eric is one of my favorite stories because a lot of people, when I talk about capital, when I talk about credit, when I talk about financing, they say, oh, debt is bad, right? Now, Eric was one of those people. He thought that bank loans and credit and relying on someone else meant that he was losing control. He thought debt was bad. He had no idea how to really structure it. He thought banks were against him. He pretty much bootstrapped everything from the ground up. Now, Eric was a 10-year entrepreneur. If you've been an entrepreneur for any amount of time, you know it's not easy, right? Highs, lows, ebbs and flows, and everything in between, right? You got great days, you got bad days. If you last 10 years in entrepreneurship, you're doing something, right? So it's not to say that Eric was a bad entrepreneur. It was just saying that life happens. Things come up, right? And if you're a real entrepreneur, you understand that. That's what happened to Eric. It was burning him out. It was slowing his business. And he just thought everything was not real, right? So when he came to us, his perspective was that the banks were against him and that they were his enemies. And all we really did was a paradigm shift to help him understand the same thing I'm talking about today. Lenders and banks are in the business of lending. And when you know how to leverage them correctly, keyword leverage, then you can position yourself to work with banks and treat them as investors, right? Again, change the perspective. Banks and lenders are not against you. They are in the business of lending. We just have to know how to position ourselves. And when we do that, when we do it correctly, the reason I like to talk about this, we work with a lot with investors. We work a lot with acquisitions, right? We work a lot with private equity and family office, and these things get really creative. But when you're pitching when you're talking to investors, you have to pitch investors, right? When you're talking to the bank and when you structure it the right way, banks are coming to look for you, right? So again, when we learn how to structure things the right way, things become a lot more simplified, right? So ultimately, we help them understand banks aren't your enemies. You can use them as investors. And if you speak their language, they're going to understand what he needs to do, right? So all we did was we structured his business, help him build his credit in the business name, and we applied for 0% funding. Now, if you look over here on the right, the reason I like Eric is because he thought debt was bad, and we turned him to a non-believer. But also, if you look over here on the right, this is one of my favorite banks out in the Midwest, Key Bank. It's not available in every state. But for one, you can see two things. He got a business line of credit for $50,000. If you look right here, he got a business rewards credit card for $40,000. So highlights two things. He got $90,000 from one bank, and he would have left. Remember how I talked about earlier about multiple products that we can get from a bank? A lot of people would have left either $40,000 or $50,000 on the table. So if he went there just for the business line of credit and he got $50,000, of course he'd be cheering. But he may not have realized that he would have left $40,000 on the table. On the reverse, on the flip side, if he was looking for a business credit card and he went there and he got the $40,000, he would have been happy and cheering, but he also wouldn't have realized that he left $50,000 on the table. There are a lot of applicants who leave so much money on the table because they don't apply the things that I'm teaching you and have taught you tonight, right? So again, these things are very, very important and are applicable for the things that I'm talking to you about, right? Now, ultimately, what we talked about here all day is that, again, funding is a process. Funding isn't luck. It is not luck. We are not going and hoping and praying that we get what we are requesting. No, we are positioning ourselves ahead of time. So by the time we're submitting that application, even though we can't guarantee it, we know that we are in the highest probability possible to get the capital request that we're looking for, right? So remember, the reason I say this is that the clients you just saw in the case studies we just talked about from those different scenarios, they didn't get lucky. They followed a proven strategy. They followed a proven system, which is the same one that I taught you today, right? Step by step. Very simply, they had a roadmap. They knew what banks to approach and when. How did they find that out? By asking the questions that I taught them. They understood how to structure their business to qualify. This is why we call ourselves the funding playbook, because when you follow the system and you follow the playbook, we're going to win the game. That is the power of having a real playbook, right? So again, we covered a lot. I just want to simplify everything we've talked about with 4 phases, right? So you got phase 1 is the clean and align phase. You want to access all of your credit reports. You want to view them. You need to verify and make sure that your name and address matches everywhere. If you have any negative marks, it's okay. It's fine, right? But now that you have this information, if you have negative marks on there, now we just have to fix it. Now we have to clean it, and we have to fix our habits going forward, right? That's phase 1, clean and align. Phase 2, stabilize and prepare. So you want to pay down your card balances. You want to make sure you have those business bank accounts open, and you want to gather all of your key documents, right? Remember, when you prepare, when you stay ready, you ain't got to get ready. Very, very important. Phase 3, verify and plan. You're going to identify your strongest reports. You're going to map out which banks to approach and when. And you're going to get pre-qualified with the banks that you're looking at, right? That's phase 3. And then phase 4. Please don't do phase 1, 2, and 3 and not do phase 4, right? I see so many people who do phases 1 through 3, but then they get scared to submit the application. Remember, all the work you did was prior to submitting the application. So by the time we get here, we should be ready to submit that application and pivot, right? So again, when you execute and review, I don't give you information just to say good information. I give you information and strategy because I want you to execute on that information, right? So you're going to apply in a smart sequence in a strategic manner at the banks that you're looking at. You're going to log the results and adjust. So whether you got an approval, whether you got a denial, what relevant credit bureaus they pull, right? All of that. These are data-driven decisions, and all you're going to do is plan the next round. And here's a hack. If you get denied at a bank, it doesn't necessarily mean no. NO, in my mind, means next opportunity. But here's the hack when it comes to lending. So legally, when you have a denial or a bank denies you, they have to tell you why, and they have to give you the information, right? So for example, if you apply at a bank and you get denied, most people are like, oh, I ain't never gonna get no funding. I give up. The smart person says, hey, they're gonna give me the cheat code. So when they send you that letter, it's called an adverse action letter. When they send you that letter, they're going to tell you exactly the reasons that they denied you. So that's like taking a test and getting a cheat code, and then I'm going to go back and take the test. Because now that I know why they denied me, all I'm going to do is fix that information and reapply, right? Very simple. Again, strategy. We have to be solution oriented, and we never take no as an answer, right? Very simple. Now, what do you need to qualify, right? We talked about a lot of information. What do you actually need to qualify when it comes to submitting applications, right? So we're going to talk about a couple things. We're going to talk about the 3 C's. There are 3 C's when it comes to lending: credit, cash, or collateral. So credit just means you have good personal credit or good business credit. Cash means you have good personal income or strong business revenue, or you have collateral, which is an asset or something of value that can be put up to borrow against, right? It could be real estate, it could be certain assets. We've even helped clients get funded when they have like investment portfolios and things of that nature, right? So there are different strategies and different strokes for different folks, right? Now, y'all heard me say it earlier. I hate credit scores. I think it's one of the biggest false flags when it comes to funding, me personally, right? But if we're talking about credit scores, typically, generally speaking, it would be a 680 credit score across all of the bureaus. You want at least one major credit card, right? Major credit cards are things companies like Visa, MC stands for MasterCard, Amex stands for American Express, right? You want something, those are examples of major credit card companies. You want at least 1+ year old credit card with at least a $2,000 limit. Now, it's not to say that if you have a credit card that has lower limits, it's not to say that you won't get funded, but something that you have to understand in lending is there's something called comparable credit. And this is another thing that I see people get misunderstanding on. They have great credit reports, they have great credit scores, but they may not have high credit limits. And comparable credit is this: banks or lenders are looking at what you historically have been able to manage in comparison to what they are going to consider to lend you. So it's not to say that you can't get funded for a smaller amount on a credit card. It's just that we have to realign those expectations for what those expected limits are going to be. The amount you request and the amount you qualify for are 2 different numbers, right? And it's important to note that. No derogatory marks. That means no collections, no charge-offs, late payments, things of that nature on the credit report. Now, sometimes late payments happen and it's just a mistake, right? Lenders understand that. But remember, if that's the case, we have to build a new pattern of payment history. So if you have late payments, you at least don't want them within the last year, right? If you're trying to submit an application and you got late payments that are within the last year, within the last 12 months, you're really going to waste your time. You're going to waste your inquiries, and you're not going to get the result that you're looking for, right? So at least if you do have late payments, institutions know that things come up. That's fine. You just don't want any within the last year. No, we talked about inquiries earlier. You really want no more than 3 inquiries within the last 6 to 12 months. And the key data point that we talked about earlier, you want your balances less than 30%. Now, what do you bring whenever you're doing the application? Just like we talked about earlier, you want to bring your personal ID that can match your ID or your addresses and your names. You want your proof of address to match with the ID. And sometimes they will ask for certain things like a utility bill, a bank statement, or a lease. You want to bring your EIN letter from the IRS so that your business is easily verifiable. You want to bring your articles of incorporation, and sometimes the OA is the operating agreement for that particular entity. When I talked about the Secretary of State earlier, you will get the articles of incorporation or the articles of organization from your Secretary of State. If you have business bank statements that have verifiable revenue, bring your business bank statements. And remember, an explanation of your business and use of funds. Very important, we talked about earlier, a short explanation of your business and funds. Remember, you want to be experienced and qualified. Now, ultimately, what's next? Again, everything that I talk about is to get you to take action, right? I don't want you to sit on here and say good information and not go do anything. I want you to execute on the information. So the biggest question is, what's next? In my perspective, you got two options. You can take what you learned today and you can go and do it yourself. And if you do, you will be better prepared than 99% of people who are out here applying for funding completely blind. Or we understand, oh, really quick, if you go out and do it yourself, perfect. I would love to see you do it. Just do me a favor and tag me and 7 Ways or Christina that you joined this mastermind, that you got this education, you got this information, you implemented it, and now you got an opportunity, right? That's all I ask, right? Now, we understand convenience. We understand simplicity. We understand confidence. So hopefully you take this information and execute on it, whether either by yourself or we do offer a service where you can let our team guide you every step of the way. So we do the personalized audits. We have the custom funding sequences. You have access to our expert strategy, structure, and support from someone who structures deals every day. And you get access to our proven network of lenders and resources, right? Either way you choose, I don't care which way you choose. I just want you to take action on one of them. Either way you choose, you now have a roadmap. The only question is how fast do you want to move, right? Now, anytime someone works with me, I like to always put everything on the table because I want people to know that, hey, when they work with Dorsey, I got it real, I got it raw, I got it applicable, I knew what the expectations were. Because the truth is, when it comes to this process, I want to work with who wants to work with me, and I still want to provide value to those who don't, right? It's all good. But I like to set the expectation. So when you work with us, there's a couple different ways to get started, right? Now, what does it take to get started? Because most people, when we get to this point, they're like, Dorsey, I would love to work with you and your team, but I'm sure I got to pay thousands of dollars to even have a conversation, right? And really figure this out. Well, the best part about this is, even if you just want an idea of where you are, Christina and 7 Ways, they're going to have a link. We do a free intake. On the free intake, we look at your information and say, hey, you would be able to look at, move forward with funding. You may not be able to move forward with funding based on, your situation. And even on our free intake, we give you an audit that tells you, hey, if you're qualified, you can move forward to speak with one of our funding experts. If you're not qualified, we don't just say, hey, good luck, go figure it out. You get a document that is specifically to you and your situation, which needs to be fixed. So the intake is free, right? Now, if you decide to work with us, if you decide that you just want the extra service, right? What does it actually take to get started? And the thing I want you to understand is every business model I have, and specifically for this, our model is performance-based. I don't like being one of those people. I'm not one of those people who like to make all these empty promises and all these different things that never pan out, right? I'm someone who likes to say what I mean and mean what I say, and I like to get paid based on my performance, right? That's fair, right? So our model is performance-based, and because of that, we are very intentional about who we work with, right? So understand that clients who do decide confidently, move quickly, and stay committed, they get the best results. Because again, what I've talked about today is funding is a process and it's a system. Now, if you decide to work with us after your intake, we do require a $500 deposit. Again, I like to set the expectations ahead of time. Now, the way that this works is we are a performance-based company. So the $500 deposit is credited towards your total amount of funding. What I always like to clarify, that's skin in the game. It's our filtration to say, hey, I believe in this, I want to get this done, or I don't believe in this, I'm not looking for funding right now, right? Either way, perfectly fine. Now, what I always like to say to people, just for clarity, is that if you decide to work with us, the $500 is not an extra fee. It is literally credit to the performance that we help you receive. And all that does is activate your file and covers the work that starts on day one, from the onboarding, the client portal setup, all the training and resources, the support access, the file review, the preparation and funding strategy. And remember, everything I talked about before we're ever able to submit an application, all the work is done before we get to submit the application, right? Now, we're a performance-based company. So we like to get paid on our efforts. We like to deliver those results, and we like to get paid on the results that we get delivered for it, right? So with our organization, we work on a 10% performance-based success fee, which is paid after you receive access to the funding. So if you decide to use our services and you're qualified for us to be able to service you, there would be a $500 deposit that would be credited towards the 10% success fee after you get funded. There's no retainers, there's no guesswork, there's no risk beyond the deposit, right? Now, why is it built this way? The deposit makes sure that the clients who enter the process are serious and committed, and it reflects the value, time, and infrastructure that our team provides from day one. Even on the intake, like I said, we offer free intakes. Our team has to execute those intakes, right? So we like to provide the value that we offer. The 10% keeps our incentive aligned with yours. In the funding industry, we don't want to make $500. We want to help you get funded. And this is a team effort, right? This might be your first time meeting me. You might have seen me a couple times, but this 10% is our success aligned with yours. And we only earn the rest once we deliver those results, right? So understand, we move strategically, we keep the process organized, and we help position you for funding with confidence, right? Now, what's going to happen? 7 Ways and Christina and her amazing team, they're going to put a link in the chat. It would take you 30 seconds to fill out for the free intake call, and at least you can see what you would be qualified for, or at least understand where you are currently, right? The most important, the only thing that I can promise throughout this whole thing was 2 things. I gave it my all to make this process as simple as possible. And regardless of where you are, whether you're qualified and we're able to get you funded immediately, or whether you have some challenges on your credit, the only thing that I can ensure you is that we will help you figure out what your first step to get funded is, right? Now, ultimately, next steps, again, I like to set all the expectations. If someone works with me, I like all the expectations be set up, right? So when they put that link in the chat, you're going to fill out that link. It's going to take you about 20 or 30 seconds. A calendar is going to pop up after you put in your information, and you're going to be able to schedule a one-on-one meeting with someone from our team. Now, a couple things. When you book that meeting, immediately, when you book that meeting, you're going to get a text message and you're going to get an email. Now, if you don't see the email, depending on your email settings, it is in your promotional folder, or it's in your spam folder. So check that immediately after booking, because there's going to be a couple things in there. There's going to be a confirmation of your date and time, but there's also going to be a video in there that I personally shot that sets all of the expectations. It outlines everything that is about to happen before it happens, and it ensures that you can get the fastest result and have the best experience. Now, the next thing, When you do that, again, you're going to get a text and you're going to get an email. Please note right here, we capitalize it. We are primarily a text-based support team. So when I say text-based, please do not email. Please text. If you want the fastest way to get support, you will text. If you want to wait some time to get a response, then you'll email. So I'm going to tell you, do not email and text. So what happens is when you get that text message, that's an automated text message, yes. But if you reply to that text message, you will get a real person who will be connected at our team, who can answer whatever questions and make sure that you have everything aligned. Now, remember, we service a lot of clients. We have a lot of partners. Please understand, responses can take, on average, 3 to 24 business hours, right? Our team responds in the order that they are received. We have a great support team, but please understand, in funding, just like I talked about this whole process, this is a specific process. This is not like we sell water bottles and every water bottle we sell gives the same exact experience. No, with funding, it's not blanketed answers. Our clients get personal reviewed responses, so it can take some time for you to get your answer, right? Now, intake call best practices, because the first call you would be scheduling with our team is a one-on-one 30-minute on Zoom. Couple things. If you work with us, we run a professional business. We expect all of the clients and businesses we work with to operate as a professional business. So you must show up on time. If you are more than 5 minutes late, we have about a 3 to 4 minute understanding. But remember, if you are more than 5 minutes late to your appointment, you will have to reschedule. It won't matter if you showed up 5 minutes on time. No, we have a lot of clients. It is a very personal process. You must show up on time. If you are more than 4 minutes late, you will have to reschedule because it will affect somebody else's appointment, right? Now, you must be at your computer. You will be downloading and uploading documents for our team to help you. If you have technicalities, that's why we schedule one-on-ones, because someone from our team is going to help you do so. In order for you to have the best experience, you must be at a computer. Sometimes when you're operating on mobile, the documents and things like you send may not view the same exact way, right? So you must be at a computer. And yes, in order for us to understand your specific situation, you must be able to share your personal information. So yes, you will need to have all of your personal and business information ready, right? So if you decide to work with us, we would love to work with you. Fill out that link with 7 ways. Take your 20 or 30 seconds to do so. You can schedule with someone from our team, and we can ultimately figure out the first steps to get you funded. Now, I tried to be as short as possible, but again, sometimes I do get a little long-winded. I am very passionate about what I do, but I do always leave some time at the end for Q&A. So I would love if anyone has any questions, if anyone has any concerns, if anyone has any feedback at all, now is the time to do so. So the way that we do this, I'm sure that 7 Ways does it similar to this all the time. Please raise your hand. There is a raise the hand feature. If you have questions about that, you can let me know in the chat and I'll be able to walk you through where that is. But please raise your hand. I will call on you. Now, the one thing I do like to say, I don't know how many people are going to have questions. I do like to say no question is a dumb question. Please don't miss this opportunity while we're here right now to have a question that you thought was a dumb question and you didn't get it answered. And now you might be waiting months or years because you didn't get that one question answered. Now, the last thing I'll say before I take the first question, at first, because I don't know how many questions there will be, please leave it to 1 question or 2 questions max. Then if there are more, if there's not any more hands being raised or any more questions being addressed, then you can hop back in line. So the first hand that I see raised is iPhone. You can go ahead and unmute and ask your question.
I don't know if that's my phone or is it
Yes,
someone else. Okay.
that is you.
All right. This is, I guess, besides the question and answer, really my favorite master class. Um, I wanted to ask a question about timing when you're borrowing money. I just entered a situation where I have two properties and they both need lots of work. So I know that I need a big influx of cash and to have that done. And then it may take about, let's say, 6 months for everything to be done. These will eventually turn into rentals. What kind of timing am I looking at in order to be structured to pay this back, or where the bank would look favorably at me saying, okay, this is the project she has, this is the estimated amount of money she'll make, then how long are they going to give me to pay this money back? Thank you.
Understood. So phenomenal question. So it's a depends answer, right? It's going to depend on which product you're going to use. So it depends on whether you're going to go personal products, whether you're going to go business products, whether it would be a loan, a line of credit, a credit card, etc. 6 months is pretty average, I would say. Well, sorry, not average, but a very manageable time frame. Most lending products would at least get you to 6 months, a year, 18 months. Sometimes, depending on the product or the timing, you can refinance or you can do certain things. But I would say it really depends on ultimately where your current credit is, what kind of assets, if income, credit, or potential collateral. But I mean, 6 months is a reasonable time period, just based on generally without seeing the information. A credit card could be applicable, a line of credit could be applicable, or a business loan or a cash loan could be applicable. But 6 months is a relatively low time frame. And then just the last thing I'll add to that, if to get into the specifics, like I said, this is all I can give general insight without seeing the credit report and the finances. We would just have to, we would be speaking very general. If you work with our team and you go through the intake process, then we could be a lot more specific. All right, it looks like Miss Parker, you are up next.
Hi, can you hear me?
I can hear you.
Okay, thank you. I think part of my big issue, before I even get started, is utilization. I didn't have that utilization issue the first time I went for business funding, but right now I think my big issue is for utilization. Would a trade line like Credit Strong or something like that help with that utilization to help get me qualified? And again, how long does it take before it impacts the credit? My credit score if I was to get a trade line.
Okay, phenomenal question. So if it's just utilization and you have a good credit profile and you don't have any other derogatories, what we typically do because we see that a lot, especially this year, we've seen that a lot is the utilization being higher. What we do is because utilization is going to impact the credit report by 35%. So that's a large percentage of the credit report. So what we do, the strategy we typically do is we would go get a cash loan. That cash loan, we would use that cash loan to pay down the utilization, because then typically what happens, the utilization is going to drop, not a guarantee, but the credit score will go up. And when that happens, banks don't always, when that happens, that's going to put you in a more qualified position. Banks understand that a lot of this is strategy. And even when you do certain things like that, even if you're opening up another loan product to deal with that utilization, the bank realizes that says, hey, you're smart because it's structured the right way. So the fastest thing that I would do, just assumably, is go get a cash loan, pay down that utilization, and then reposition myself for business funding.
I actually had thought about that too, getting a loan, but I was like, my mind wasn't wrapped around of how the loan would need to be paid back, and so say if I were to get a loan, how would the loan payback structure typically be? And another part of my question was before that I didn't say is inquiries. How bad is inquiries? That's another big issue. The other issues, derogatories, I am working on getting off. But my worst is Experian. My TransUnion is pretty good though. My
Okay.
not no, I'm sorry. Yeah, TransUnion pretty good. Experian not so good. Equifax is so-so. Before I had threw off my utilization, I had two of them and about the high, well not high, but low eights. And then
Okay.
my other one with the bad Experian, that one was a high seven. And but it's the derogatories on there, I think, still cut me from getting the business credit from it because yeah, it's got some derogatories on there. So
Understood.
about how would the payback be?
So two things, couple part that I would answer that. So again, even if one bureau is good, if you're from me speaking, I would just strategize and prioritize lenders that only pull that one bureau. So if you have a good TransUnion and the others are have some challenges, I would just focus on lenders that pull the TransUnion. Now, the reason to address the inquiries can be disputed. They can be cleaned up the proper way, right? And you can get inquiries disputed. Anything that's on your credit report, you do have the legal right per the FCRA, not legal advice, but you do have the legal right in order to dispute it per the FCRA. So what we do
Been
is
trying.
if a client comes to us with inquiries and they're not attached to open accounts, we need to see if those inquiries are verifiable. If they're not, then those inquiries must be removed. So what we typically do, any account or any inquiry that's not attached to an open account, we want to see that cleaned up out of there. And we mean an open account on the credit report. So the first thing, we would look at inquiries. The second, because if there's inquiries and they're not attached to open accounts, if they're being denied, the assumptions that I would make is it's either A, the number of inquiries, B, derogatories, or C, utilization. So I would say clean up the inquiries, and then it's going to be based on the product. Remember, if you do a cash loan, every product has its purpose. Even with high utilization, if you don't have the other stuff messed up, you can apply for a cash loan because that's a lot of what cash loans are used for is debt consolidation. So because of the purpose of that product, you wouldn't be penalized for that product. Once you receive it, then the strategy is you would pay down your utilization and then you would wait for your utilization to report. And then you could go apply for other funding based on your bureaus that are good. Does that make sense?
Mm-hmm.
So yeah,
And
that's how I would look at it.
how long does inquiries affect the score as far as the banks are concerned? Because some of them been on there. I think one of them, I think it's been at least about a year that I'm like, it ain't even attached to nothing. They still haven't taken it off. I'm like, and then
So
I'm thinking some
so
of them should be getting ready to fall off anyway.
there you go. So inquiries are going to show up on your credit report for 2 years. Honestly, for our organization, any inquiry that's over a year old, we don't even care about. Inquiries show up on there for 2 years, but we only count the number of inquiries within the last 6 to 12 months. If it's over 12 months, we don't even care about it.
Okay.
And then disputing inquiries, depending on the method that you dispute with, obviously it's going to vary. What I typically teach is people to dispute specifically TransUnion and Experian inquiries over the phone. When you do it the right way, it could be done within same day or within a week or two. If you dispute like through the mail or through like a online platform, it could vary. So there's not really a defined a really defined timeline. It can vary per client, but I would say it could be as short as a couple days. It could be as long as a couple weeks or a couple months, depending on the strategy.
Okay, well, thank you. And I see some other hands up, so I ain't gonna hold up the time. But if you
Of
got
course.
some verbiage as far as telling them over the phone to get rid of that inquiry, because they ain't work with me.
Yeah. There is a lot of, I mean, if you work with us, like I said, again, a lot of this is specific. So a lot of this has to be verbiage, has to be leveraged with the right statute, the right strategy, and with the right positioning. So like I said, it's not like there are some blanket strategies, But blanket strategies really don't work. In order for things to be applicable, it really has to be specific
Tailored.
to your situation. Yeah, and we just wouldn't know that unless you were working with us. But yes, they do have a couple more hands. Phenomenal question. If once I answer these questions, if you do have some others, you can hop back in. But thank you, Ms. Parker. Those are great answers. It looks like Stuart is up next. You can go ahead and unmute.
Hey, how's it going, man?
I'm good. How are you?
Pretty good. Pretty good. Yeah, so I just
Love
had
to
a
hear
couple
it.
questions. So I'm newly setting up my businesses, got my trust set up. Now I set up a Wyoming LLC, set up state specific LLCs for Ohio is where I'm going to be doing business at. So on the two Ohio LLCs, those are the ones I'm going to try to build business credit with. So when I had listened to one of your previous trainings where you was talking about the NICS codes. I used to work in insurance too, so I used to see those NICS codes or whatever. But as far as structuring it to be a low risk business, I'm doing buy and hold real estate and wholesaling real estate on one of them as well. So when I'm trying to give them a business explanation, I know they don't like real estate per se. You know, like you don't want to put real estate in your business name or nothing like that because you know it could lure they consider that risky. So
Right.
you had gave me two NICS codes on the last one. I think it's 541-613 and then 541-611. So what I'm trying to figure out is like how do I give them a business explanation without saying that I'm collecting rent checks, you know what I'm saying, or collecting wholesale fees, because then they ain't necessarily favorable for that. But that's what I'm going to be doing, even though I'm trying to use a NICS code that might be categorized as another activity type thing.
Absolutely. Phenomenal question. So yes, the NICS codes. So the reason that I gave you those two codes is for a specific reason. So 541613 is for marketing consulting. We did previously use 541611. However, that SIC code got run out. So now we use 541618. There's really no difference between 541611 and 541618. They're both management consulting, but the 611, the 541611, that has too many people have used that SIC code and they didn't manage the funds correctly, right? So when there are a high number of applications for specific SIC codes, banks do become wary of that and they do change that, right? So then certain codes can become high risk that weren't previously. Now, the reason that we use those two codes, 541613 and 541618, is because marketing or management is applicable to whatever business that you have, right? You're going to have the marketing, whatever business, you're going to have management in whatever business. So what we would do, or what I would do personally in your particular situation, is I wouldn't position myself as a real estate company, but I run the management or I run the marketing for whatever company that is. So I wouldn't be dealing within real estate specifically when I'm communicating with the bank. I'm managing marketing for project management companies, etc. Or I'm doing the management for whatever industry that I'm in. Because the industry that's doing the active work, they're seen as high risk. And the reason is for like real estate, something could go wrong. Things are risky with insurance and like liabilities. So that's why it's high risk. So it's not to say that I can't service those industries. It's just saying that if I tell the bank that I'm doing that directly, then I'm going to be classified as high risk. So that's why we use those. You could offer consulting services to that industry, or management services or management consulting services to that business. So what I would do is I would choose a sector. So, hey, I do marketing consulting based on this, or I do management consulting based on helping them hire, based on internal structure, managing payroll, right? Structuring deals. I just do the consulting work for that particular industry, not necessarily that I work in that particular industry. Does that make sense?
Yeah, that makes sense. That's pretty good information too. But when I'm depositing, like if I'm getting, say I get equity in the deal, a real estate deal, and then they deposit, I get the passive income check coming in every month, or if I'm getting a wholesale fee and then that come, $10,000, whatever comes in, then, they not going to question it. It's just for basically for the initial meeting. They not going to
Correct.
question all the deposits therefore
There
after
you
type
go.
thing.
There you
Okay.
go. That's it.
And
I
I
was
will,
going to ask you in the beginning. As long as you're
yes,
making
sir.
revenue, hey, I'm being paid for my consulting services.
Right. And then I would want to say that I'm a consultant to, like, I consult the wholesaler, and I consult like the people that actually buy and hold the real estate, instead of
There
saying
you
I'm
go.
the one on it.
There you
Even
go.
though I,
There you go.
like, okay. Okay,
So
sir. Then
you would do consulting for how to market their companies, or for them how to manage communication systems, how to structure their marketing, different things of that nature. So you focus on one section of the business and you consult on that.
right. And I'm doing multifamily specifically. So, like, just saying that I help, help multifamily marketing and consult them on
There you go.
market management of it. Okay.
There you
Okay.
go.
So I got,
Hey, I do digital marketing. I do digital marketing consulting services for established multifamily investors. They pay me to build their sales scripts, their sales process, and marketing plans, or run their digital advertising, or whatever the case may be. Build their digital products. You don't do it specifically. You just service that particular industry.
right. Gotcha. Gotcha. Okay, sir. And then one last question. So, um, like you said, we got to go through the consultation for you to tailor a specific strategy, and everything like this. But just to kind of give you some insight, so I can get this question answered. So basically, I had a bankruptcy from it was back in 2020, so it's actually about to fall off March of 2027. So I got about 8 months or so till that happens. So I also utilize my personal credit in order to increase my business and everything. So of course that's maxed out and everything. But I don't regret it, because, like I said, I got a ton of value from what I did with it. But that's
Absolutely.
just the position I'm in now. So I just recently found out that Bank of America has a secure credit card, secure business credit card, that goes up to 50K. And I'm expecting to get a cash infusion in the near future. And originally I was going to use it to pay down. Like, I got 125K card on my personal that I had maxed out. That's like my highest line on my personal. Because I was trying to build like comparable credit. So I used my money on that one too, and got a secure card that way. But I'm thinking about doing it right now, since I gotta wait till that derogatory fall off before we can fully clean up everything. So I'm like, okay, well, I can go ahead and start building. If I can leverage this 50K, I could go ahead and get a secure business credit card, max it out, because in business credit it ain't a bad thing to max out, as far as I was taught in the past. I don't know if that's true or not, but
Depends on the
I was.
product.
You said yeah.
I said it depends on the product. If you're doing like business credit cards and you want other business credit cards, utilization doesn't matter. But if you're looking for like a business line of credit or a business term loan, yes, that utilization will come into consideration.
Okay, I got you. Yeah, but right now my strategy is just go ahead, you leverage the money while I'm waiting on that bankruptcy to fully fall off. Go ahead, get a business credit card so I can be building, because to me, I'd rather leverage on my own money, and then that's get me ahead of the line. Go ahead and get the 50K trade line, so that by the time I clean up and ready to come with y'all to help me finish cleaning up, I'm thinking you could give me 50K 3 times instead of just maybe getting 50K from one place. If I can get 150 off my 50, then I would think that that's a good return.
There you go.
So yeah, I was thinking, like, I didn't know how y'all felt about like secure credit cards. I know everybody like, oh yeah, I ain't trying to use my own cash, but I'm the opposite, because I feel like if I could still use that credit card to pay my contractors, then I'm getting double use of the money, even though I do got to pay a little interest on it. But it ain't something that's gonna hinder me financially or the business or anything. It's actually gonna help, because I'm building credit while we waiting to the other stuff fall off.
Right. Yeah. I mean, people talk down on secured products. I mean, honestly, for someone who has liquidity or has access to the cash, it's one of the fastest ways to build credit. Because, like, for example, especially if you're rebuilding credit, or you're establishing credit, because of that comparable limit. So, like, let's just say, for example, if I'm rebuilding credit after going through certain circumstances, if I go to try to get a line, they might give me $300 or like $500. It's going to take me forever to build up
Right.
my
You'll never get
comparable
a 50K
limit.
card. Right.
Literally, yeah. So if you have liquidity, I know on the internet they talk on secured products. It's one of the fastest ways to build credit. So you're thinking right. You can take the long way to get 50K, or you can put up your own 50K, have that comparable. So now when the other lenders look at it, they say, hey, Stewart's already managing 50K. So now we can comparably give him something else. And sometimes secured products make it better once you don't have any other derogatories, because remember, lending institutions know that you had to put up your own money for secured products. So if they see that, they say, hey, he had to come out of his pocket, or that person had to come out $50K. So that's, again, they are good products to use if they are used strategically, especially if you do have liquidity like that.
Yes, sir. Yep. So that's the plan right now. That's what I'm gonna do. Because like I said, like I heard you say, and I heard somebody else say about comparable credit. So I'm like, yeah, if I get a 50K card on there, I got a high likelihood of getting another 50K or whatever on there. So yeah, I'm gonna utilize that strategy and get all my stuff together, and then I'll be contacting you guys, see if we can move forward. Because I want to get big money, man. I need hundreds of thousands so I can invest in these big buildings and everything. So but this would be a good start to get towards that. So I appreciate your time for answering questions about how to structure the LLC with the Knicks codes too.
Of course. And again, thank you, Stuart, for watching all of the, some of the previous content. There's a lot of great content in there.
Absolutely.
All right. So I do have time for like one more question. Looks like Mr. Corey Green is raising his hand. You can go ahead and unmute.
Okay, can you hear me?
I can hear you. Oh, you're muted. I can hear you for a second. Let me see if I can help you out.
Okay, can you hear me now?
I can hear you.
Okay, thank you. All right, now my question is, I recently watched a video where it's like a ex-NBA player, and he was talking about how he was retired or whatever. He was talking about how he go get basically money from the bank to utilize and use or whatever without touching his millions in the bank. So for this, you know what I mean? He got millions put up in the bank, he said, and basically I go borrow from the bank, and even if I can't pay that back or default on it, they still don't touch my million in the bank. My money still goes untouchable. So basically what I was wanting to know is, how do I go about doing something like that where I borrow from, let's say, basically I have like, let's say I got two brokerage accounts. I have two brokerage accounts, but how do I borrow money from those accounts or get lending for, you know what I mean? It's
Understood.
like using it as capital, but not using it as capital. Because like the NBA player said, he said, hey, if I don't pay it back, I just got bad credit. I still have my millions in the bank. So would you?
I would say, all right, so this is part of the industry that I hate. There's people make bold statements like that without necessarily really providing context. So for one, every bank is going to be different. I'm going to tell you, don't go to the bank with that intention. If you're going to go to the bank, don't try to run off on the bank.
No. I plan on utilizing the money to make more money. You know what I mean?
Right.
Investing the money into something.
There you go.
He was just giving an example that he don't use his millions. He keep it put up, and he borrowed the bank's millions.
There you go.
You know what I mean? Invest more and make more money. I'm not. He was just saying that even if the business investment went bad, he's saying that he would still have his millions.
There you go. Yes. Now,
So
as far as borrowing against it, yes, some banks do that. We personally, a lot of our wealthier clients don't want to sell their stocks or their portfolios, because then they would be hit by taxes. This is not tax advice at all. This is just what I've seen people do. But what a lot of them will do, certain banks can do it. We typically do it through our contacts with Merrill Lynch or Fidelity, because if someone has certain stock portfolios or certain things like that, then yes, they can borrow against them without ever touching their own cash or without triggering a taxable event. Some banks can do it, not every bank can. And then you also have and for the banks that do it, you have to be in these certain programs, whether for like investment banking or wealth management, to have your assets with that particular bank or your portfolio with that particular bank in order to do it. When we do it for our clients a lot, but it's typically through Merrill Lynch, and then secondarily as Fidelity. But yes, that is a very common strategy that people who clients who do have a lot of liquidity or assets, instead of selling or borrowing against it, instead of selling it or liquidating it, they'll just borrow against it.
Okay, it's funny you say that because I also have a Merrill Lynch account, so I'm guessing it's Bank of America that they would get the money from, being that Merrill Lynch is
There you
basically
go. There you go.
their brokerage company.
There you go. Yes.
So that's basically how that works. When you're
That's it.
dealing with basically an investment firm that's linked with a bank, basically.
There you
Because
go.
I had Bank of America, but I also have a brokerage account with Merrill Lynch.
Smart.
So basically,
Yeah.
you're saying I could just go to Bank of America and get a loan from them, and they'll see that I have this money over here in Merrill Lynch, and I want to borrow from it, and they're together anyway. Basically, you know what I mean? They're basically in bed together, and when it comes to financial institutes, they're like a sister, I guess,
There you go. Partner.
corporation. Yeah, partner.
There you
Yeah.
go.
So okay, so that's basically how that works.
Yes. Now the caveat to that is
Uh-huh.
if your Merrill Lynch is attached to Bank of America. Just because you have a Bank of America account doesn't mean you'll automatically be attached to Merrill Lynch. You do have to connect those accounts. When we do it, we don't go through Bank of America. We have contacts directly at Merrill Lynch that we typically use. Because you also have to realize, just one other thing to notate for your particular scenario, if Bank of America is middlemaning for Merrill Lynch, Bank of America is not doing that for free, right? So that's just a little note. You just kind of, gotta make the best decision possible. But we like to cut out the middleman personally, so we just go directly to our contacts at Merrill Lynch.
So wait a minute. So you're saying, you said I need to connect those accounts
Yes, you
for
would have to
Bank of
connect
America
those
and Merrill
accounts.
Lynch?
Yes,
Okay.
because Bank of America
Or
has a
just make them
partnership
one,
with.
basically.
I'm sorry, you cut out.
Or just make them basically one account.
There you go. Connect them. Yes. And if you
Connect
want to
them
do
together.
that, then if you want to go to Merrill Lynch through Bank of America, then you would contact your Bank of America, your banker. They would go through the process to get you connected with Merrill Lynch, and then you could do that if that's what you choose to
And
do.
you're saying the Merrill Lynch is the better company
It
to
just
go
cuts
with.
out the middleman.
Because
It
it's cutting
just
out,
it
Bank
yeah,
of
it
America
just
is
cuts out the
cutting them
middleman.
out.
There
Right.
you go. That's all.
Okay. And I appreciate your advice, man. I appreciate you.
Of
And
course,
let
of
me see,
course.
do I have any other questions? That's pretty. So how would that work if I have a brokerage like with Webull or another, you know what I'm saying, like Fidelity? How would that work then?
Fidelity,
Because they
Fidelity
do it.
is Fidelity does. Webull, I
Hmm.
haven't done them with Webull. Anytime I've
Right.
worked with clients personally who have brokerage with other places, typically I
Right.
would just introduce them to my contact with Merrill Lynch, and then he would manage that process for me. Because Webull, as far as I don't want to give you wrong advice, but I don't know if it's possible with Webull. We just personally, that's just not our preferred method. So we just like to stick
Okay.
with what works and what we have experience with. Not to saying that other places can't work. It's just that we just found what works for us based on our contacts and our perspective, and that's just where
Okay.
we funnel all of our clients to.
Okay. Man, thank you. I appreciate your time, man. I really
Of
appreciate you
course,
and your advice.
of,
Thank you.
of course, you're very welcome. Glad to help. All right,
Uh,
7 ways. I do appreciate Christina. 7 ways. I do appreciate y'all having me a part. I do have to get ready to go. I hope that this was extremely valuable. I hope that everyone got some applicable information they can use. If you love to work with us, we would love to work with you. If you don't want to work with us, perfectly fine. But if you found this valuable, I would appreciate you tagging me at CEO Dorsey and at 7 ways or Christina on social media. Let us know that you appreciate it. Let us know that you got value from it. And I look forward to seeing y'all and working with y'all very soon. So, Christina, 7 ways, I appreciate it. Y'all have a great rest of your night. I wish you much blessings and abundance over your life. And I will be back soon. Talk to you. Bye.
Yay. Thank you so much. Thank you, thank you, thank you, Mr. Dorsey. I appreciate you so much for being one of the pillars here. You are a phenomenal educator. You came with all of the sauce. I know that the community just gained so much knowledge from what you just shared. So I want to encourage everyone here, go ahead and click the link that's in the chat, get on the calendar so Mr. Dorsey and his team can help you with the next steps. Okay, please don't try this at home, okay? You want to be able to get connected with Mr. Dorsey and his team because they will be, they will put you in a position to where they'll be able to get you there quicker versus you trying to figure out all the pieces yourself, okay? He told you that he has the banking relationships, right? He's checking the pulse with his bankers every 60 days. So when I tell you that I have seen him walk his clients into the bank, like him and his client right there with the banker. Like that's the type of service that you get from Mr. Dorsey. So he has been an educator in our program for years. I highly endorse him. He is one of the most phenomenal people that you guys will be able to connect with. He's a like-minded individual. He is a wealthy trustee, so he operates within trust, but then he also leverages those statutory entities, the corporations, the LLCs. And so that is his strategy, and he teaches you how to do that. And his strategy is phenomenal because it will shorten your time frame, right? So something that might take you 1 to 2 years, they're able to get it done quicker. And so that's what you want, right? You want to be able to, be able to leverage the business credit. You want to be able to tap into that OPM sooner rather than later. So without further ado, this is going to conclude our masterclass. I love you guys so much. You guys are phenomenal. And I'm so glad that you guys stayed until the end. So it is recorded. It is going to be on your portal. And the replay is also going to be on our YouTube channel. So if you are not subscribed to our YouTube channel, then what are you doing? You need to be subscribed to the 7 Ways to Love YouTube, okay? So the replay link is inside of the chat. Now, our next masterclass is going to be on Monday with our crypto expert, Mr. Ken. You guys are familiar with him. So if you want to learn the ins and outs and the A to Z when it comes to crypto, our educator Ken is meeting you guys every single Monday at 7 p.m. Eastern Standard Time, okay? So you want to definitely tap in with us this Monday for that masterclass. So I am knee deep into everything that he's teaching. He's resurrected my entire crypto portfolio, and I am so grateful for him. And he is a trusted resource. He is our community member. He operates within trust. So if you are not in crypto, you need to get in crypto, okay? Because God already showed me that cryptocurrency is a part of the wealth transfer. God already showed me that OPM is a part of the wealth transfer. God already showed me that trust is a part of the wealth transfer. God already showed me that life insurance is a part of the wealth transfer, okay? So I will be having a life insurance be your own bank masterclass coming up. I don't know the exact date and time, so you need to be able to tune into the calendar that we provide with the list of events. So if it's not next week, then it will probably be either the week after or sometime in July. But we have that Infinite Banking Be Your Own Bank. That masterclass is coming up. I'm gonna see if I can squeeze it in for next week, Thursday, but that is preliminary, so don't hold me to it because some of you guys be coming for me and I'm like, wait a minute, like we have educators that have schedules, like hold on. So anyway, so for you guys to stay connected, just go ahead and look at the announcements channel that we have in the Telegram chat. And if you're not in the Telegram chat, please get into the chat, okay? Because I know all of you guys are not in the chat, right? We have 2,500 trustees and only 633 of you guys are in the chat. Okay, so get into Telegram if you're not there already, and get into the Facebook community so that you guys can stay up to date with what we have going on here. So without further ado, I love you guys so much. You guys are absolutely amazing. Also, so one thing I want to tell you guys is that I am licensed. I am licensed when it comes to the life insurance, right? So if you guys are interested in getting your license, then let me know, because I am building out my team so that it's not only me that's able to facilitate the wealthy trustees, because this is a very in-depth, time-consuming thing for us to be able to build out these life insurance policies for you, specifically for your trust. And so I have an entire team that I am working with. And some of them are in our community. So if you guys either have your license or you're interested in getting licensed, then go ahead and join us, right? Because we want to be able to cultivate that circle of trust. That is so important. So what I'm going to do is I'm going to put a Zoom link in the chat. So I'm actually heading to another Zoom right now. I'll put that Zoom link in the chat, and then you can just send us a text message. So hold on for me 1 second. Let's see here. Copy. Edgar. So let's see here. Chat. Let me find the chat. Where's the chat? Hold on. There we go. Okay, let me put it in the chat 1 second. You know, technology. I wish it was a little bit faster. There we go. There it is. Perfect. Copy and paste. All right, so this is the Zoom that I'm heading to now. So if you want to join me on that Zoom, yeah, you see Ivy put it there. Ivy's so good. Listen, shout out to Ivy, okay? Because she keeps my head attached to my body, and I love her so much. I love you, Ivy. And I love my entire team, okay? We're a team of 8, and we're growing. We're growing, we're growing, we're growing. Why? Because you guys are growing. The community is growing, okay? We started with 1, now we're at 25, and we're helping as many families as humanly possible. So anyways, I am heading to that Zoom. So if you want to join me, you can hop into that Zoom as well. So bye, you guys. I love you so much, and I'll see you Monday on the masterclass. Have a wonderful weekend. Yes.
Hello? Oh, she probably gone already.
I'm not gone, Faith. I'm about to end the Zoom.
Okay. So can I ask you real quickly? So you do IUL insurance?
Yes.
Oh, great. Okay. So I'll get back with you. I know you gotta go now.
Okay. All
All
right.
right. Thank you.
You're welcome. Bye.
Bye.